You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 5th day of September 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast, that's our live training room, 2 hours every trading day. But to get in there, you got to be one of our traders or taking your 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us at the top of the hour, he'll walk you through it step by step a couple times. Now, you might be thinking, well, gee, this is Friday. I should probably wait till Monday. Wrong. Go ahead, sign up for the trial today so that we can get your indicators up and indicating today. Then you'll have the entire weekend to get familiar with the indicators. Your trial will officially start Sunday night at 6 p.m. Eastern. That's when we go to work. And we'll run right on up until next Friday afternoon at 5 p.m. Eastern. Now, when you take the trial, there's no credit card required. And you're not just getting access to the live training room. You see, we work around the clock. There's 2 hours of live training every day. But we use a little thing called Telegram, where we have multiple channels, multiple discussion groups, where those on the trial can actually talk to our traders, and where we disseminate all the important information to our traders and those taking the trial. Things like the weekly trading zones, the concierge trade alerts, the Logic 247 alerts, and so much more. You get access to all of that. We treat you just like you were already a member for 5 consecutive trading days. Again, no credit card required. We want you focused on what's being taught. So, at the end of your trial, you can make a well-informed, intelligent decision whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There are 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, just click the link in the email, and it will automatically log you into our platform. Now, the benefit of that is you'll immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN, the Christian Financial Radio Network, since 2005. But all you have to remember is youtube.com, which you already know, /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,900 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years, day by day. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to. But again, it's a great way to get to know who we really are and to literally see how we've evolved over the years. youtube.com/CFRN. Our daily schedule right here at the top of the hour, 1 p.m. Eastern, give or take. Michael will join us for a recap of what happened in the live training room this morning. And then, whatever times are left, we'll do some live trading on the TradingView platform, and then wrap things up with our good word for the day. But we'll start where we always do, with our daily devotional. We started a new topic yesterday, enemies of the heart. Our scripture today is 1 John verses 1 through 10, and I'm going to share it with you from the Message translation. This, in essence, is the message we heard from Christ and are passing on to you. God is a light, pure light. There's not a trace of darkness in him. If we claim that we experience a shared life with him and continue to stumble around in the dark, we're obviously lying through our teeth. We're not living what we claim. But if we walk in the light, God himself being the light, we also experience a shared life with one another, as the sacrificed blood of Jesus, God's Son, purges all our sin. If we claim that we're free of sin, we're only fooling ourselves. A claim like that is arrant nonsense. On the other hand, if we admit our sins, simply come clean about them, he won't let us down. He'll be true to himself. He'll forgive our sins and purge us of all wrongdoing. If we claim that we've never sinned, we out and out contradict God, make a liar out of him. A claim like that only shows off our ignorance of God. Again, that was 1 John verses 1 through 10 from the Message translation. So today is day 2 of 5. Today we're going to talk about fessing up. The first enemy of the heart is guilt. Guilt is the result of having done something we perceive as wrong. The message from a heart laden with guilt is, I owe. Consider the man who runs off with another woman and abandons his family. Without realizing it at the time, he has stolen something from every member of his family. He has robbed his wife of her future, her financial security, and her reputation as a wife. From his children's perspective, this man has stolen their Christmas, traditions, emotional and financial security, dinners with the family, and so on. Now, the man who did all this doesn't think in terms of what he has taken. Initially, he thinks in terms of what he has gained. But the first time his little girl asks him why he doesn't love mommy anymore, his heart is stirred. He now feels guilty. Dad owes. Nothing less than paying that debt will relieve a guilty heart of its burden. People try to work it off, serve it off, give it off, even pray it off. But no amount of good deeds, community service, charitable giving, or Sundays in a pew can relieve the guilt. It's a debt, and it must be paid or canceled for a guilty heart to experience relief. How do you get your guilt canceled? The answer comes in one of the first Bible verses I memorized as a child. 1 John 1:9. If we confess our sins, He is faithful and just to forgive us our sins and to cleanse us from all unrighteousness. Confession has the power to break the cycle of sin. And like most medicinal remedies, it works when applied properly. Proper application happens when we confess our sins, not just to God, but also to the people we've sinned against. Guilty people are usually repeat offenders. And as long as you're carrying a secret, as long as you're trying to ease your conscience by telling God how sorry you are, you're setting yourself up to repeat the past. However, if you start confessing your sins to the people you've sinned against, odds are that you're not going to go back and commit those sins again. Confess both to God and others, and you will slay this enemy of your heart. Over the course of this devotion, we'll talk about the 4 enemies of your heart. Just remember the number 1, guilt. So, what are you feeling guilty about? Whatever it is, confess your sin to God and to whomever you have hurt. Don't put it off. Do it today. Let's pray. Heavenly Father, thank you for sending Jesus, the Word of life, to bring us into fellowship with you. Help us to walk in the light, living with honesty and integrity before you and one another. We confess our sins and trust in your promise that if we confess, you are faithful and just to forgive us and cleanse us from all unrighteousness. Fill us with joy, truth, and your light, that we may reflect Christ to the world. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Friday. Short week. Monday being a holiday and all that. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices, as they're called. Currently, the Dow down 198 points. NASDAQ down 30. S&P 500 down 25. The Russell 2000 positive by almost 3 points. Now, is that the beginning of a turnaround? Because those other three are pretty deep in the red. Anything's possible. In the commodity basket, crude oil down $1.94, trading 61.54 last. That's a drop of over 3%. Gold up $44.50, trading 36.5120 last. That's a gain of 1.25%. Silver up 18 cents, trading 41.60 last. In the Asian markets at the close, Nikkei posted a gain of 438 points, just over 1%. The Shanghai rose 46 points. For the Shanghai, that's a gain of 1.25%. The Hang Seng gained 359 points, almost 1.5%. And in the European markets at the close, FTSE down 8, the DAX down 173, the CAC down 24. So we had a green day in Asia. It was a red day for the UK. And at the moment, it is a mixed Radio Friday here in the US of A, with 3 of the major indices pretty deep in the red. But the Russell now up just over 4 points. Be real interesting to see if the Russell leads us out of the sell-off we saw today. Turning to the news, if you watched any of RFK Jr.'s testimony yesterday, it was pretty brutal. And boy, did those Democratic senators have a party hammering the heck out of him. And we all know that he has the speech problem. And so, remember in school as a kid in the playground, the kid who had, I don't know, some kind of physical thing that he just wasn't up to speed with the rest of the kids. Remember how he got bullied and picked on, and hopefully you were the one that jumped in the way, got in the fray, and said, hey, knock that crap off. But they were relentless. Not to mention stupid, but relentless. And as difficult as it is for him to speak, when they would ask a question and he tried to answer it, they wouldn't let him. They would just talk over him. It was embarrassing. Embarrassing. And I'm not saying that RFK embarrassed us. I'm saying those Democratic senators embarrassed what we call our government. Much of the testimony centered on vaccine policy, following Kennedy's decision last week to fire CDC Director Susan Monarez. Monarez contends she was pressured to pre-approve recommendations from an advisory panel considering vaccine recommendations for COVID-19, RSV, measles, and others. That panel, recently reconstituted to include vaccine skeptics, is due to meet September 18th and 19th with expected implications for insurance coverage. Kennedy yesterday disputed Monarez's version of events, saying she was fired for answering no when asked whether she was trustworthy. That's an interesting answer, and also something I don't think somebody would make up. Kennedy also addressed his agency's decision to pull funding for mRNA vaccine research and restrict approval for the updated COVID-19 vaccine, among other decisions. He separately criticized the lawmakers on the committee for accepting donations from pharmaceutical companies. The FDA, as just one example, it's over 50% of their funding. From who? The pharma bros. Yeah. The purse rules. Italian fashion designer Giorgio Armani has passed at age 91. The company did not disclose a cause of death, though he did miss a Milan fashion show this summer, marking the first time he missed a runway show in his entire career while recovering from undisclosed health issues. Now, he got his start in the fashion industry as a window decorator. By the mid-1980s, his clean tailoring defined corporate style began to take over. He later expanded into fragrances, cosmetics, accessories, and sportswear, outfitting athletes and designing Olympic uniforms, evolving into a global brand valued at more than $10 billion. His clothes became a red carpet staple, with Armani earning wardrobe credits in over 200 films. He was honored with Italy's Order of Merit, France's Legion of Honor, and a UN Goodwill Ambassadorship. Giorgio Armani. I wonder if the value of those Armani suits in your closet just went up. Well, it's football time again. The reigning Super Bowl champion Philadelphia Eagles beat the Dallas Cowboys 24-20 last night to kick off the 2025-26 NFL season. Tonight, the Kansas City Chiefs face the Los Angeles Chargers in São Paulo, Brazil. You can watch it at 8 p.m. Eastern on YouTube. The first of 7 international games before Sunday's 13-game lineup. Interesting. This is not your father's football. I'm not the big sports guy, so hey, but I got nothing against it. All right, Tesla. proposed a new compensation agreement for Elon Musk, potentially worth about $1 trillion. A massive package without precedent in corporate America. The long-awaited proposal, designed to incentivize Musk to lead Tesla for years to come, set a series of ambitious benchmarks he must meet to earn the full payout, including expanding Tesla's nascent robo-taxi business and growing the company's market value to at least $8.5 trillion from where it is today, around $1 trillion. He's got 10 years to get the job done. It's a nice incentive package. Well, we had a weak jobs report this morning, which many are saying seals an interest rate cut at the Federal Reserve's next policy meeting later this month. I think it's on the 17th and 18th. As the Trump administration once again stepped in to criticize central bank chairman Jerome Powell for not acting sooner. Jerome Powell needs to do his job and cut the interest rates now. That's according to our Labor Secretary, Lori Chavez de Rivera. What's he waiting for? President Trump added in a separate Truth Social post that Jerome, too late, Powell should have lowered rates long ago. I mean, let's face it. Had Powell lowered interest rates when the data said it was time, not when his opinion or his worries held him back, but when the data-driven way things are supposed to work, our country would have saved trillions of dollars in interest payments. And the jobs report today would have been much rosier. Whether you like it or not, the trickle-down theory works. And I'm mixing metaphors there. Powell said best the GDP could be was 1.48 and came in at 3%. Ahead of the jobs report, Powell opened the door to lowering rates last month at the famous Jackson Hole speech that sent the market soaring, noting that the balance of risk appears to be shifting and that may warrant adjusting our policy stance. So he's raped and robbed America to the point where he no longer thinks he can get away with it. And his taskmasters, the puppeteers, they got more money than they can ever spend, or their children, or their children's children. So, why not cut the hardworking American taxpayer a break? A new labor report backed that view up today. The economy added 22,000 jobs in August, weaker than the 75,000 economists expected, with the unemployment growth rising to 4.3% from 4.2%. Job growth for June was revised into negative territory to minus 13,000 jobs, while July showed below-trend growth compared with the past year, marking 3 months of slowing job growth. Hey, Biden left quite a mess. It takes a minute to clean that up, something of that magnitude. From Bloomberg, the Bureau of Labor Statistics downplayed a lockdown of its online databases after warning of technical difficulties in the moments before the release of the closely watched August employment report. What? Locking the database prior to any release is a normal part of our release process. Shouldn't they always be locked down? Now, this comment came from BLS spokesperson Stacy Standish in an email sent out just before the release this morning at 8:30 a.m. Eastern, adding that the report would still be published as planned. The report, which was released on time, showed job growth cool notably last month, while unemployment rose to the highest since 2021. Earlier today, the agency posted a statement on its website saying, "Sorry, we are currently experiencing technical difficulties. All BLS data retrieval tools will be available as soon as we've resolved the problem." The BLS has experienced a series of botched releases over the past year, including an early upload of some inflation data as well as delayed publication of highly anticipated jobs figures. The incidents prompted an independent review of the agency, which found that BLS was not sufficiently focused on how it disseminates key economic data and required a revamp of its entire culture. Now, how have they gotten away with it for so long? God, I don't know. Lawmakers this week renewed a push to ban lawmaker stock trading, as previously competing proposals were merged and a new 10-page Restored Trust in Congress Act was unveiled to great fanfare. The hope the stars might finally be aligning around the issue. That optimism rests on widespread public support. One survey found 86% of Americans backed the ban. Who in the heck are the other 14%? Oh, lawmakers. And a trio of policy choices that could help the bill navigate coming political attacks and the pocketbook concerns of some skeptical lawmakers. Have you ever looked at what congressmen and women earn? Even senators. Now, it's not chump change. But somehow they go into office, in many cases, dead broke. They're not all trust fund babies. But within a few years, they're worth millions of dollars. How does that happen? I always thought insider trading was illegal. I mean, they have access to data the rest of the world would literally kill for. And they don't have an account somewhere in Uncle Ethel's or Aunt Ethel's name. Yeah, I think not. So, last from Reuters, Jaguar Land Rover is working at pace to resolve a cyber incident that has severely disrupted its retail and production activities. The breach, which the company disclosed Tuesday, is the latest in a string of cyber and ransomware attacks targeting companies around the world. In Britain, household names including Marks & Spencer and Co-op have fallen victim to increasingly sophisticated breaches. Jaguar Land Rover, JLR, owned by India's Tata Motors. Now, you may not remember, but there is a company called Tata Motors that was going to bring us this air-powered car. You remember that? Whatever happened? I guess they decided to buy Jaguar instead. Jaguar Land Rover. We are now working at a pace to restart our global applications in a controlled manner, a statement from JLR said. With just 3 car-making factories in Britain, our retail and production activities have been severely disrupted. Factory staff at Britain's largest automotive employer, with around 33,000 employees, will stay at home until at least Tuesday. Now, it doesn't say if this is a ransomware attack or not. I guess we'll learn more. over the weekend, because that news just came out today. All right, Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just the E-minis, it's also crude, gold, and silver. We're currently in week 369. Over the last 369 weeks, which is a little over 7 years, we've issued over 20,400 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Now, Valerie did the recap this morning at 6:30 a.m. Eastern. That's before those unemployment numbers came out, a couple of hours before. So she will update the recap and finalize it for the week this afternoon or evening, as she does each week. But at the time she did the recap, because Monday was a holiday, since the markets opened Monday night at 6 p.m. Eastern, we've issued a total of 42 alerts so far this week, which isn't bad for a 4-day week. It's usually somewhere between 50 and 60 on a full week. Now, at the time she did the recap, we were still waiting on the outcome of 8. That gave us 34 actionable alerts, of which 4, or 12%, would have been stopped out. Again, based on simple market structure and the simple process that we teach all of our passport holders. Now, the logic alerts can come out anytime around the clock, 2 a.m., 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Every logic alert has an entry price, long or short, followed by an initial target. It's designed to help you get your goal for the day. And then typically additional targets, and then a final trade to target. The purpose of the alerts is to teach you how to read a chart. Now, whatever field of endeavor you choose to go into, there's going to be material, books, textbooks, just all kinds of stuff you got to read. And of course, yeah, you know how to read, right? But when you read a chart, there's no words, no sentences, no paragraphs, no punctuation. What? How do I read this? You got to learn. Now, you can trade the logic alerts, but please make sure that you're using them to learn how to read the chart. That's the real purpose behind them for over 7 years. Now, long before we rolled out Logic 247, we had our original alert service, the concierge trade alerts. They are quite different. Number one, they're published as a static report shortly before the Globex open each evening. The Friday session that we're in today started last night at 6 p.m. Eastern. But 5 minutes before the markets opened, all of our traders and even our trial members had all of these targets: S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through the individual markets, you'll see these targets drawn out on the chart. Just remember, all of our people had those targets 5 minutes before the market opened. So let's go where we always go. The S&P 500 E-mini futures, the bellwether. And look at this. We got another new all-time historic high. And now look what's happened. It's quite a recurring theme. It's been going on forever, pretty much. Get a new all-time historic high, you get a sell-off. New all-time historic high, and you get a sell-off. New all-time historic high, you get a sell-off. New all-time historic high, and, well, the market has sold off, but look where it came down to, the BBC. Remember, the pullback holds more often than it doesn't. Price always reverts to the mean. And this is what I'm talking about. In our case, the mean is green. We call it the BBC. It just stands for bull, bear, cross. When price crosses below the green line, we're bearish and expect lower prices, as you can see. And when price crosses back above the green line, we're bullish and expect higher prices. Now, when price reverts to the mean or pulls back to the BBC, you can see that the pullback holds more often than it doesn't. Whether it's pulling up from below or once we get above the BBC, when we pull back held, pull back held, pull back held, pull back held. Pullback held, pullback held. This pullback from Tuesday, I mean, it took us all the way down to these lows right here. See this? This is, when I say market structure, this is the kind of thing I'm talking about, okay? You should be expecting support in this area. And buyers came in right on cue. This is a red candle all the way down. But before the day closed, before the session closed, traders drove it back up just above the BBC. So then we had a green day, followed by a green day. Today we put in a new all-time historic high, but we got a big red candle here. Now it looks like we're about equidistant off the high and the low of the day. So where we close will of course be very important. Now the new all-time historic intraday high. This is the new all-time historic closing high. What does day close at? Come on. 65.16 and a quarter. Is that right? 65.16 and a quarter. Yeah. Now that's the closing, the all-time historic closing high. We're well below that right now. That can change by the end of the day. But the new intraday high is 65.41.75. 65.41.75. That's a little high. Okay, 65.41.50. Anytime you can get it within a tick on the daily chart, you did good. Okay. So I've been talking about how this looks kind of like a rounding top, and to me it still does. Okay. Now remember, we still have this 100% fib extension way up here at 65.85. I think to keep this bull market healthy, we need to see a retracement. The shallowest possible retracement is now at 61.49/50. Here's the 38. I really think we need a good route. Take us down to about 57.10, and then this thing could be a rocket ship. This could be one of the greatest Santa Claus rallies in market history, if that's how it plays out. Remember, we have the Fed announcement mid-month, I think 17th, 18th, or 18th, 19th, whatever. It's a two-day session, Tuesday, and then we get the information Wednesday, and then Jerome does his press conference on Wednesday. So we'll keep you posted on that. So, price is now back below. See how we briefly turned to blue and climbing? Now we're back below. We're sitting right on top of the black step line. But we've come down and touched the BBC and bounced. Again, the pullback holds more often than it doesn't. Now we've had a lot of pullbacks, and it's held and it's held and it's held. But you gotta know, eventually, it's gonna trade through, just like it did here on April 24th, and just like it did here on February 21st. But you see, it's the following day that confirms it. Down here, we closed above on the 24th, but it was the 25th where we opened and closed above it that really confirmed it and set all this in motion. So we actually closed below the BBC here, but we were still touching the BBC. And the next day, what do? We pop right back above it. That's a hold. That's a hold. Everything you see here, every pullback, has held so far. Should we, for whatever reason, close below the BBC today, you got potential support right here at the low from Wednesday. Okay. Then, of course, Tuesday's low. And you got this other little low down here, right there. And then here's the 62% fib extension. The daily chart's important because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So whether you trade stocks, futures, crypto, Forex, ETFs, I encourage you to spend 2 minutes with the daily chart before you actually drop to your smaller time frames and start trading. Number one, you get a free look over the shoulder of the deep pockets that actually move price. Kind of nice to know what they're up to. This is a little confusing, but that red body gives it a bearish slant, but right on cue to the tick, the BBC. Also, the daily chart allows you to determine potential areas of resistance and support days, weeks, months in advance. We do it here on this broadcast, day after day, week after week for quite a few years. All right, let's go to the 30-minute chart. 30-minute chart is where all of the Logic 247 alerts are created and the concierge trade alerts. When I told you would see drawn on here, okay. The vertical line separates today, Friday, from Thursday. Back here's Wednesday. Now, this was the opening candle last night. As you can see, price ran right up to the long target. Got a little bit above it. And then on the pullback, the top of that long target held as support for quite a few hours. Then we dipped down here. And then we found support at the zone. So this candle opened red. Came all the way down to the zone. We found support at the zone. We found resistance at the zone. These horizontal lines are our weekly trading zones. We've published them every Monday since December 14th of 2009. On a normal week, they come out Monday morning at 6:15 a.m. Eastern. When Monday's a holiday, they come out Tuesday morning at 6:15 a.m. Eastern. Either way, once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So you might find it of interest that today's high, today's new all-time historic high. Where was it? At a weekly trading zone. Huh. Okay. Now, first we had support, and then resistance. Think about that. The new all-time historic high at a weekly trading zone. The actual number was 41.75, so we missed it by a tick. Okay, my apologies. I'll try harder. Then comes the news. Well, actually, the news, this was the 8:30 news. This was in hopes of a rate cut, so we get a bounce off bad news. No, maybe, is it bad news? Nobody can figure out anymore. This is not your father's market. So we get this huge drop. We come down through this zone. We hit this zone and catch a bounce. And then we continue down. And we didn't quite make it to this zone. At least not yet. Now this zone is 64.49/64.50. And the low is 52. So we missed that by 2 points. We missed this by 1 tick, and we missed this one by. So as we bounce off the zone, see, when price drops to a zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. Again, we've published the zones every Monday for 15.5 years. Now, on the way down, you'll notice that the black step line and red and falling, they're running parallel to each other. So what's changed? You see how the black step line has hooked to the right? If that step line crosses red and falling, see, right now it's directly below it. Over here, it was clearly to the left of it. Now it's directly below it. So where's it trying to go? Trying to cross to the right side. Okay? And when that happens, we expect a retracement back to the BBC. Does it happen every time? No. Does it happen more often than not? You betcha. Okay? All right. The Dow. Here's where we opened last night. We ran up to the weekly zone. We had resistance there and consolidation. Only 3 things happen when price encounters a weekly zone. 70% of the times consolidation, 20% of the times rejection, 10% of the time is the slice. So this candle here opened at 734 and ran up to 763. So more than enough in that one candle to get your goal for the day, because you have everything positioned properly. You're above the BBC. You got blue and climbing. You're above the zone. Step line is above blue and climbing. So no reason you wouldn't want to take that trade. But anyway, we run into resistance before we get to the zone. Now we can go over here and look and see why, but I encourage you to do it. It's time for you to learn how to read a chart. So that resistance got us below the BBC. And down we go. We trade through this zone, and we continue all the way down to this zone, to the tick. So we got support at a zone, And that support will always send the market looking for resistance. And look where we found resistance. At the zone that was published Tuesday morning at 6:15 a.m. Eastern. Resistance always sends the market looking for support. Where do we find support? Basically at the zone. 45,325/330. We did trade through it a little bit. Now, this first low right here, as you can see, that's this low here. But then when this low, because when this candle opened, it was red. And when that red candle failed to take out this low, that's an indication that the market may be changing direction. And sure enough, we ran into red and falling, which is bearish. And that's pushed us back down to the short target again. And we're just kind of consolidating there right now. The Russell, here's where we opened last night. Just kind of real quiet sideways action. We got a little bump, then we come back to the zone, and then a little bump, and then back to the zone. Then we get below the BBC, and we come down to the weekly zone at 72/73. We spiked it a little bit. Right into this area right here. See right here where you got this one wick pointing up and this wick pointing down. If you put your cursor right between the two, you'll find this low right here. That's market structure. It's where the market found equilibrium here at that price. It's an important price, important area. So support sends us all the way back to the long target and the zone. Resistance sends us back to support at the top of the long target. And then we bounce through that zone and then we come down hard. We don't make it all the way back to the short target though. Okay. This is not an area where I would have been anticipating support, but you got to trade what's in front of you. Support has sent the market looking for resistance. We've overcome the BBC. We need to take out this high right here, this previous 30-minute candle. Then we'll be at the long target. And then if we get above the long target here, let's say 2294, there's a nice 6-point run up to the zone overhead. Potential. Very nice window of opportunity. Okay. Keep that in mind. On the NQ, this is where we open. We hit the long target, consolidated, and then we made a run. And the weekly trading zone right there. That's the high of the session. Resistance will always send the market looking for support, which it found at the weekly trading zone to the tick and the short target, which is now bouncing us back up to resistance ×2 at red and falling and the weekly trading zone. Michael's here, so he's going to give us a recap of what happened in the live training room this morning. And then do a little live trading on the TradingView platform, and then I'll come back and we'll look at crude, gold, and silver. And the new all-time historic high right here, Michael? It was one tick shy of the weekly zone at 65.42/43.
Just got hammered down from there.
Yep, and then it found support at the zone 49/50. Actually, I think the low was 52. Yeah, so we missed hitting the zone by 2 points here. And we missed hitting it here by one tick. Yeah, so anyway, guys, When I come back, we'll talk about crude and its continued decline. I mean, crude's getting pretty cheap. So,
Yes.
all right.
All right. Here we go. Here we go. Oops, I gotta refresh this.
It looks good.
Close that one. Bring up this one. There it is. All right, so here we go.
Hey, open a tab up there. Just. Oh, yours. Oh, you're not on Chrome. Never mind.
No, I'm on Brave.
There's a new thing in Chrome in the search box where it says search in AI mode. I just noticed that this morning. I don't know how long it's been there, but I noticed it this morning.
Let me open a Chrome browser and see. Here it is.
I don't think yours says it.
There. Your Chrome is up to date. Mine does not look like it says it in here.
Mine right up in the where you would type in whatever you're going to search.
Oh, up here?
Yeah, right there. Mine on the right side has the thing that says search in AI mode. Huh. You probably just need to update yours or verify it's you or some nonsense.
Probably. Okay. Yeah.
All right. Anyway,
Yeah.
I found that interesting. I haven't had a chance to play with it.
All right. Well, I haven't used Chrome in a while because Brave just, it's, if you look at it, Brave usually it tells me how many things it's blocked and all that.
Right.
And if I don't do a new tab, if I do a new window over here, new window here, there it is. 219,287 trackers and ads blocked. 1.57 gigabytes saved. 3 hours saved. So,
don't you find that a lot of websites won't allow you access?
No, most of the websites I look at let me right in. It's not that bad.
Because I turned on an ad blocker at some point in Chrome, and a lot of sites I went to said, "Hey, the way we earn our living is by advertising. So, unfortunately, if you're not willing to look at the ads, we can't show you our content." I got that quite a bit, so I think I ended up turning it off. Yeah.
Yeah, well, that's through Chrome, and I think that is how they earn a living. I'm not sure how Brave earns a living, but I don't think they have any. I don't know how Brave does it. I don't know what their business model is.
Yeah,
but I know I don't pay anything to them, and I've never heard of advertising on it, and I never paid anything to them. But,
okay, I'll let you get to work.
All right, here we go. Good afternoon, everyone. Today is Friday, the 5th day of September, 2025. So, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Just click on that purple button. It's going to bring you to the registration page. On this registration page, all you need to do is fill out the bottom here. All right, down here at the very bottom gives you TradingView login ID, but we ask for your name, email, phone number. Then gives you a TradingView login ID. Hit register, and when you do that, you'll be sent everything you need to get into the room in the morning. We will enable the tools for you once you do that. Okay. So to the spreadsheet. I hardly talked at all during the break, and I thought it was going to help my voice, but it doesn't seem to have. The spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. We had the best day we've had in a while today. We made 252 ticks on the NQ. We lost 30 on the Russell. We made 34 on gold. We made 68 on the ES. Today it took 5 minutes and 2 trades to get to $1,500 with 10 contracts, and we took a total of 52 trades. We traded a bunch this morning. Maybe that's how my voice is. So there's a lot of talking. On the month now, we're at $4,727 over 4 business days, averaging $1,181 per contract per 2-hour business day. It's almost twice what we were at yesterday. On the year, we're at $189,172. That's over 151 business days, averaging $1,252 per contract per 2-hour business days. Did we bring it up a little today? We did. Finally brought it up a little today. It's the first time we brought it up a little in a long time. Actually, yesterday we brought it up a little too, I guess. Well, it's the first time we had consecutive days bringing it up. Anyway, following the 2420 blueprint, we took just 5 minutes this morning, right? 5 minutes. We had a couple of long days this month out of the 4 days, but we took just 5 minutes this morning to get the goal for the day. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year, you would only had to work 20.61 hours. You'd be up $113,972, and you'd be averaging $5,528 an hour. Okay, that's where you stand right now. What is this number? Where do I get that? I don't know where I get that number from. Does it ever change? It's at 7521.79. Let's make this a 50. Nope, it doesn't. Okay, so this is a 34. I was just curious. I could go see where I got that from. I think that is 7521. Yeah, I think that is when we did the 2420 blueprint. That's what we ended up with on an average hourly rate. I think that's how it ended in August of last year. This is what, August of last year, yeah, 7521, because a month before that, it wasn't even listed. There was 7521 there. And that was, was that August? That was August. I don't know. I don't know what that number's coming from. Anyway, sorry, I digress. The hourly average doing the 2420 blueprint is $5,528. Okay. All right. Let's get into the trades. Now, the majority of the trades were on the NQ. We actually had 26 trades on the NQ. That's half of them were on the NQ. I think that's half, isn't it? 52. Yeah, that's half. But we did okay on gold today. I think we did stop out one time. Didn't we? Yeah, right there. 2 times. All right, so on gold, here it is. We started out with a minus 15. Then we got a 25 right there that brought us to a plus 10. And then we got a 12 there, got us to 22. Then a 10 to 32. Then a 5 to 37. And then we stopped out again. That brought us to 22. And then we had a 2 and a 10 for the next 2 trades. There's a 2 and there's a 10. Those are our last 2 trades on gold. Now, that brought us up to a total of 34 on gold. During the break, let's see, during the break, there was one trade right here that would have been a break even for me. Arguably a trade there that would have worked out. Maybe been a break even when it went up there and came back down right here. Probably would have been a break even. Don't see any runaway trades yet. This one, nope, that's not a trade. This one right here, that would have been a decent trade right there. That would have probably been a break even. Nothing. This would have been a decent trade right here. So there are a few decent trades during the break. Nothing stopping out. Only one that looked like it was going to be a runaway trade. Now the Russell whooped my butt this morning. Go all the way back to the beginning on this. Hang on. All the way back to the beginning. There we go. We started out with a stop out here on the Russell, minus 15. And then we followed it up with a stop out here on the Russell. We're at minus 30 at that point. Then we picked up 5 ticks there to get us to minus 25. Then 10 ticks there to get us to minus 15. And then we stopped out again to put us down to minus 30. And that is where we ended up with the Russell today. Now, during the break, there's a trade right here during the break that would have wound up being a pretty good trade. Wound up. Would have followed up with a stop out right here, though. This might have been a stop out to the tick. It would have been pretty close right there to stop it out. This would have been a break-even trade. I would have gone to break-even right there and gotten out of break-even right there. This would have been a break-even trade. I'd have gone to break-even right here and gotten out of break-even right there. This was nothing. This would have been a stop up. And we have what we currently have right here. So this is a potential trade right now on the Russell. If I could find my Russell Dawn, I might consider putting it on. Still trying to find it. Here it is. Okay, so it's got a high right here. Come on, give it to me. It's got a high right here of 86.9. So I will sell 85.9 on that. Here it is. Now let me put this window always on top and slide it all the way over here. Okay. That was the Russell for us today. And it is, yeah, it's too far away. I'm going to cancel it. It's too far away from the midpoint now. If we go to down close now, it would be above the midpoint, so no trade in there. All right, so the yes we did pretty well on. Go back to the beginning of that. Hold it. Here we go. All right, our first trade on the ES, we picked up 4 ticks. Then we picked up 8 ticks to get us to 12. Oops, didn't do that. Then we went from 12 to 14, so we had 2. Then from 14 to 18, we had 4. Then from 18 to 22, so we had another 4. 3 break evens. Then 8 to get us to 30, and then another 8 to get us to 38. And then a 12 to get us to 50. And then a 2 to get us to 52. And there should be 2 more trades in here. Well, there were 2 more trades. One was an 8 to get us to 60, and another was an 8 to get us to 68. And that's how we ended up with the ES. Now, during the break, is this a trade? No. No, that was too low right there, I think. Yeah, that was 1 tick too low. I wouldn't have done that. I might have done it. I might have been aggressive and done it, but in hindsight, I'd say, no, that's not a valid trade. This right here would have been, I think. It's still really close. Is it above the midpoint? Is it right on the midpoint? This would have been a valid trade. A little bit of profit. This would have been a valid trade. Break even. Through them all. This would have been a valid trade. That would have worked out. I probably would have been a break even right here. I went up there, I would have gotten out a break even right there. That was a decent trade. That was an okay trade. That was nothing. That was an okay trade. That was actually an okay trade right there. That was not. And that brings it. So that was it. We ended up with plus 68 on the ES. Okay, plus 68. Now the NQ had like 1 million bars today, so I'm going to hit control and back on this. And bring us all the way back. Wow, that was a lot of bars. Look at them all. Okay, so now I'll do this, and we'll try to go through this quickly. There's our first trade. I'm not gonna look at all the trades, all right? Our first trade on the NQ, something crazy happened on this. I ended up with 83 ticks, and then I stopped out. I went from 83 up to 87, and then I stopped out here, and I stopped out there, and so we went down to 62, then down to 37, then up to 41, then down to 16. Then break even and up to 61. And from 61, we went to 106, and then we went 106 down to 81. Then 81 to 85, and 85 we had a break even. And 85 down to 60, we stopped out there. Then we had a few in a row here. We went from 60 to 64, 64 to 72, and 72 to 80. So that's those 3 right there. Then we went from 80 to 89, and 89 to 134, and then 134 to 139, break even. Then 134 to 139, 139 to 184. Then we had a break even. Then we had a plus 4. And I guess up to 188, we had a plus 12, got us to 200. Then we had a break even and a plus 45, got us to 245, and then we stopped out down to 220. And from 220 we went to 265, so that was another 45 right there. Then we stopped out again, back down to 240. Yeah, back down to 240. And then we had a +7, get us to 247, and a +5 somewhere, break even and a +5, got us up to 252. That was a lot of trading. I'm not going to go through every trade that happened during the break because there's like a million of them. So we'll just go to the end and look at what's happened most recently here. Okay, most recently, this was a valid long trade right here. In the red, there were no trades here in the red that were valid. Actually, this one right here, this was a good trade right here. And this was a good trade right here. Going back to 1 o'clock, those are all the trades. So now we'll just look at what we got. If you're just coming in on YouTube, this is what we did today. We're up $2,300 a contract, 34 on gold, -30 on the Russell, 252 on the NQ, and 68 on the ES. All right, that's what we did today, 2,300 on the month. Now we're at 4,727 over 4 business days, averaging $1,181 per contract per 2-hour business day. If you haven't taken a free trial, go here to mytradingiq.com, click on purple, no credit card required. It's going to be the registration page. Just fill it out. All right, let's get in here and see if we have anything we can trade right now. All right. All right, so what we have here is, if you get up close here on the NQ, that would be a long trade. All right, up close on the NQ right now would be a long trade. Come onto the oversold in a green background, off the midpoint. And that's what you're looking for there on the NQ. If you get a down close, it'll go flat down here. The next bar could be a trade still, but if we get an up close on this one, it will be a trade. Okay, now it's not going to be a trade. All right, it went too far away from the midpoint. It's not going to be a trade. We really don't have anything with these other markets yet. The closest thing we have to a trade setup is here on the ES. All right. Well, nothing. We're not going to have anything here. We didn't make it into the overbought. It's got to be in the overbought before we take another trade in that direction. So the markets are pretty slow. Does anybody have any questions about any of the stuff we've done in here so far? Anybody? All right. Well, nothing here. You got to come off a flat midpoint. Okay. And there ended up being nothing here. If we get a pullback, it comes out of the overbought, it's going to reset the midpoint. Okay, see, reset the midpoint. So now it could end up with something here. All right. All right, so we're oversold. We just need an up close on this now on the NQ. Just need the up close. There it is. That's a long trade. Here it is. Needs to go 10 ticks into profit, bump the stop to break even. So 775. There it is. Stop to break even. I'll lock in a little profit on that. Oops, I didn't hit break even. Stop to break even. Now I'll lock in a little profit on that. And the swing high is right there, so I'm not going to let it go too much. Right? But I'm going to let it go all the way. It's broken the swing high. It should go to all 45, and it just did. Woo! 45 more on the NQ. You guys understand why I did that, right? That was a textbook trade right there. You wait for it to come down, get into the oversold, come out of the oversold on the up close. You take it on the up close, expect to get to the prior swing high, and it went through it. Textbook. Got another one coming up right here. Get ready for it. Should have another leg length just like this. Here it is, just gapped up. I'm going to break even. I'll bring it over and show you. Here it is. I'm going to lock in 4 on this, and hopefully it's not going to take me out of 4. It should do the same thing as the last one. Oh, it took me out of 4. It should still do the same thing as the last one. But so far we're at 49 ticks. The NQ. You see, textbook. Comes down, hits the midpoint. It's in the oversold. Comes out of the oversold, closes on or above the midpoint. Take the trade. It doesn't get much simpler than it, other than me programming it to do it for you. I know. You guys have been asking for that for a long time. All right, so now we wait. And we have about 6 minutes left. Wow, I didn't realize we just had 6 minutes. We had a couple of good trades off, and it did do exactly what I wanted it to do. It actually went a little further than I was expecting it to. This is what I expected out of the trade, from there to there. Okay, and we actually got, well, we got just that, a little bit more. That's what I was expecting out of it. Sadly, it came back and got me on my 4 ticks before it went and gave me another 45. All right, now what we need is a down close on this to get us into the oversold, and then an up close on this. All right, now it can't get too far away from the midpoint. If you down close on this bar, it's going to be too far away. If we get an up close right now, it'd be just right. Just right. If we got an up close on this bar. There it is. That was actually a little bit low. I thought it was going to be just right, but you see it's 1 tick below the midpoint right there. So that's actually not a trade you really want to take. It should work out. I'm going to throw my stop and break even. I had an order there waiting anyway, right there at the top of that bar. So I'm going to lock in 4 on that, and I'm out 4 on that. That's really not the kind of trade you want to take. You want it to be on or above the midpoint. Okay, so I get another 4 out of that guy right there. And this one here, it didn't go into the overbought. Now this is important if you don't know what this is all about. Every time it comes out of the oversold, it has to go all the way into the overbought. It's going to go from the oversold all the way into the overbought before you can take another one out of the oversold. That tells you it's continued the trend. You see how this is not continuing the trend? It didn't make it into the overbought. So you don't want to take any more out of this now until it does do that. Okay. So what that does, if you think about it, when the market goes up and down like this, it goes up like that again. This is kind of what we did right here. And then it goes down like this, and then it goes up and it kind of gets stuck in here. And so now what you're waiting for is for it to come back down, maybe get below this, but you're not going to take anything in here until it goes up above this right here. Right? This is what you want to get up above. Until it proves itself to you and actually goes back up above that, where this would go back up into the overbought. And then you'll take the next cycle down right here. Then you would take that next cycle down. But you can see it's not doing that. It's changing background color to red. But that's what the indicators are doing for you, right? Just so you understand. Get rid of some of these guys. They're keeping you out of this right here. All right, we're in the overbought, but we haven't hit the midpoint. So you're not going to have a trade until it hits the midpoint, gives you a down close, and goes out of the overbought. See, no hit, no trade. All right, well, we're hitting the midpoint now, but we're not in the overbought. So we only have about a minute and a half left. It's going to have an up close, a down close on the NQ. That's not going to do it. Let's minimize this and see if we had anything anywhere else. No. All right, we have nothing here right now. I don't know, guys. There's a chance in the next 45 seconds we could have another trade, but I don't think it's going to happen. The gold is pretty close to a trade. The ES is not. The Russell is not. NQ, we need an up close on this bar, an up close on the next bar, and then a down close on the bar after that, all in the next 30 seconds. There's the first up close. Doesn't look like it's going to happen. If we get a down close on that, it's definitely not going to happen. Definitely not happening. The gold is pretty close too, but it's not going to happen there either. So I think that's going to be it, guys. I'm going to wrap it up here. So we had 3 trades in here. All of them good trades, all good successful trades. And that was it. With that, let's go back here for a second. If you haven't taken a free trial, go to mytradingiq.com. Click on the purple. There's no credit card required. It's going to be to the registration page. Fill it out. Make sure you give us your TradingIQ login ID down at the bottom so we can enable the indicators for you. And today we're up $2,300 even. All right, that brings us to $47.27 on the month with one contract, and that $2,300 was with the one contract as well. All right, that is it. With that, I can pass it back out to Fabulous Phoenix, Arizona. There is a trade here right now. Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is taking it away.
And make sure if you're signing up for the free trial, do it today so we can get your indicators indicating today. You'll have the weekend to kind of get familiar with them, and then you will have access when we go to work Sunday night at 6 p.m. Eastern. That's when the Globex markets open. That's when the concierge trade alerts come out. That's when the Logic 247 alerts come out. And you'll get the weekly trading zones Monday morning at 6:15 a.m. Eastern. So when you take the trial, you're not just getting access to the live training room. We treat you like you were already a member. 5 consecutive trading days, no credit card required. We want you to have a clear head. We want you to be focused on what's being taught. We want you to learn so that at the end of the trial, you can make a well-informed, intelligent decision whether or not trading's right for you. So don't put it off. Sign up for the trial today. Things will kick in gear for you Sunday night, 6 p.m. Eastern, and run all the way through next Friday afternoon at 5 p.m. Eastern. All right, Michael, recap of the morning session.
Today it was 5 minutes and 2 trades to $1,500 with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys, we'll pick up where we left off. Crude oil, which has been in basically a free fall for some time. Okay, this is today, Friday, Thursday, Wednesday, Tuesday. Okay. Now on Tuesday, we hit the highest weekly trading zone on Tuesday. And we've always said when that happens on a Tuesday, by the end of the week, you're usually at the opposite end of the spectrum. So we got above the highest weekly zone Tuesday. And now here today, Friday, we are below the lowest weekly trading zone. All downhill. A couple little rallies in there, but here's where we opened last night, below the BBC, so naturally we expect lower prices. Now, buyers did try to take it higher, but the pullback to the BBC held, and it held, and it held, and it held, and it even held here. Yes, we spiked up and found resistance right at the weekly trading zone, okay? But all of these candles are touching the BBC. So we never pulled away. As long as it's touching, that held. Like here, we spiked it, found resistance at the zone, the pullback to the BBC held. And it held. Okay. Then when we get on the other side, the pullback held. I'm telling you, pullback holds more often than not. Okay. Now, here we are, below the lowest weekly trading zone on crude. Step line just hooked right, crossing red and falling, and you'll see that red and falling is starting to curl up. So based on the last 15 and a half years of history, and I know this looks like a long shot at this point, and it may or may not happen. I don't have crystal balls. Based on what we've seen over the last 15 and a half years, by close of business today, price should be at or above the lowest weekly trading zone. Again, with this kind of downward momentum, again, it would be because price would have to overcome. We've got the step line crossing, okay, So that tells us we should definitely get a retracement back to the BBC. Then price has to overcome that resistance to touch this, which is in itself resistance, 6240/45. So we'll see what happens, and we'll talk about it next week. Gold, on the other hand, is above the highest weekly trading zone. It hit it back earlier in the week. Let's see. Friday, Thursday, yeah, Wednesday. We hit the highest weekly zone. And then we had quite a drop, but we never made it back to the zone below. It's kind of consolidated sideways. Last night we opened here, made a run up to the long target, pretty much to the tick. See this high right here? That's all these highs across here. This market structure, resistance. More than enough to get your goal for the day. This one candle opened at, we'll call it 36.14, ran up $400 per contract traded to the long target. Consolidated there for a few hours. We get our retracement to the BBC. See how the step line crossed right there and price comes right to the BBC, but this time we actually traded through. And we've got a couple of candles that aren't touching. So we just consolidate here a little bit. Red and falling turns to blue and climbing. And then when the news came out this morning about the unemployment, or about all the jobs numbers, we got this huge run up. This one candle opened at, we'll call it 36.12, and ran to 36.44. So at $2,200 per contract traded. Now, getting out at the exact swing high or exact swing low, that only happens by luck, okay? Because no one knows that's the swing high or the swing low till after the fact. So we pull back to the zone. Remember, when price drops to a zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. Earlier in the week, it did its job as resistance. Now, I told you earlier, one of three things happens when price encounters a weekly zone. 70% of the times consolidation, 20% of the times rejection, 30% of the time, or 10% of the time is the slice. So when a 30-minute candle slices through the zone like it's not even there. Now, when you get a slice and the move runs out of steam, this was a green candle all the way up. But when it ran out of steam, what did it do? It retraced back to the zone it sliced through, found support, and continued in the direction of the slice. Does it happen exactly like that every time? No, but that is a picture-perfect example of how it works. Okay. So then we get another leg and another retracement. Now we got another leg, but the step line has crossed. Blue and climbing is directly above price. When blue and climbing gets directly above price, that becomes potential resistance. See on the way up how these two are running parallel to each other? Okay. And then everything changed here. Price continued to go higher, which is a little unusual. But now things are starting to look more like they normally do. I could see with gold price closing the week at the highest weekly zone in the BBC. I could see these two meeting up here. Depends on at what angle we descend. And that's if we descend. I mean, something could happen. Some comment could be made somewhere and this thing could take off and head north, and that would be fine. Right now, it looks like we just need to overcome support. The black step line, we're sitting on top of that. So right now it's support. We get below it, it becomes resistance. Then you got potential support here. And again, right here where the step line actually made the cross. this low, and then bang, back to the zone. And last but not least, silver. This is where we opened last night, and this was the opening candle, and in the opening 30-minute candle, we dropped to the weekly trading zone. 41.19/41.20. You only need 2 pennies to get your goal for the day. And this opened up at 41.31. So it dropped $550 per contract traded. Support will always send the market looking for resistance, which it found at the long target. Consolidated, got a little above right here. See how we failed to take out this high? Failed to take it out, sign of weakness. So here comes lower prices. Back to the same weekly trading zone that was published Tuesday morning at 6:15 a.m. Eastern. It's where we found support yesterday, 1, 2, 3, 4 times. Then last night a 5th time, and then today a 6th time. And we shot up above this zone, but it was relatively short-lived in the grand scheme of things. This high that was put in today, it's right there. You see where blue became red? That's your spot. You should expect that to be resistance until proven otherwise. Okay. And down we came all the way back to the top of the long target. Ought to bounce, but you see how blue and climbing got above price and became resistance. That's because when that happens, it's usually on its way to becoming red and falling. Blue and climbing is bullish, red and falling is bearish. And here we sit right now atop the long target. When we trade through a long or short target on the retracement, that target itself can often become support. Or if you've traded through the short target and the price pulls back, it can quite often become resistance. So this is very typical right here. We do have red and falling overhead, so the potential for us to trade lower is certainly very real. We're still well above that $38 mark. And I mentioned a few weeks ago I'd like to see silver stay above, and it's done a good job of doing that. I mean, earlier in the week, we had some significantly higher prices. What was the high this week? It was 42.29. So we're off about 70 cents from the high of the week. So not so bad. If we finish in this area, I would be content with that. And on the S&P, now remember, when the broadcast started, you see how much distance there is from the top of the body to the wick. We had about the same amount of wick to the downside, to the BBC, the daily BBC, which we expect to be support until proven otherwise. Like it was here, and here, and here, and here, and here, and here, and here, here. So we've got less wick on the downside and more wick on the upside at the moment. Okay, it's all subject to change, but institutional traders have to make a decision. Do they want to carry these positions home over the weekend? Do they have enough confidence that this thing is not putting in a rounding top? You'll know by how the market closes today. We close at the BBC. That's one thing. If we close below it, well, that's another thing. Either way should set up or set the stage for some good volatility off the open Sunday night. And remember, that's when we go to work, 6 p.m. Eastern. To become a member, email Valerie, support@cfrn.net. Let her know that you want to become a member. She'll send you an email with all the information you need about becoming a member. She'll also include a link that you can click to make your payment. Once you do that, she's going to send you a bunch of information. Okay, some of it you won't understand, some of the terminology you haven't heard yet. That's okay. Whatever she sends you in your email client, create a folder and just put everything she sends you in that folder. Because as time goes on and you start learning the methodology and the strategy and how to use and read the indicators, there's going to be lots of information there that you need. So it'll be a good idea to know where it is. As a passport holder, you get 2 hours of live training every trading day in an interactive environment. Real trades in real time, real money. You also get private one-on-one mentoring at your request. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. That's why it's so important that you learn how to read the chart so that you know where to anticipate resistance and where to anticipate support. You're not going to be right every time. Over the last 20,400 plus Logic 247 alerts, we've averaged 20% or less being stopped out on a weekly basis. As of the recap this morning, we were at 12%. Where it'll be this afternoon when she finalizes it, I don't know. But she will post it in the appropriate Telegram channels. As a passport holder, you get the Logic 247 alerts around the clock. Get the concierge trade alerts the second they're published each evening. Monday mornings, you get the weekly trading zones, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And every Thursday afternoon, you'll get an invitation to attend the Members Only Workshop on Thursday night at 8 p.m. Eastern. And you'll get the golden keys that open all the private channels in Telegram. We have public channels for those who are taking the trial so they can talk with our traders and get all the various alerts, etc. But once you become an actual member, you will have access to everything. Just send your email to support@cfrn.net and say, Valerie, I'm ready to become a member. That's simple. All right, good word for the day. The importance of good thinking. Proverbs 23:7. For as he thinks in his heart, so is he. Now that's the New King James translation. Other translations, one you might be more familiar with. As a man thinketh, so he is. In fact, if you Google up, you can find a great book. And it's in the public domain now, so you can read it for free on the internet. Good thinkers are constantly in demand. Why? Because they solve problems. Always have ideas that can build an organization and are hopeful for a better future. And good thinkers seldom find themselves under the control of bad thinkers. Adolf Hitler once boasted, What luck for rulers that men do not think. Those who build the technique of good thinking can manage themselves, even when under an unfair ruler or in other challenging circumstances. In summary, good thinkers are successful. Dr. John Maxwell writes, I've studied successful people for 40 years, and though the diversity you find among them is astounding, I found that they are all alike in one way: how they think. That is the one thing that separates successful people from unsuccessful people. And here's the good news. How successful people think can be learned. If you can change your thinking, you can change your life. The Bible puts it very succinctly. For as he thinks in his heart, so is he. That means you will never climb higher in life until you are ready to change your thinking. But if you change the way you think, you can change your life. It's hard to exaggerate the value of changing your thinking. Good thinking can do several things for you, including generating opportunities, resolving problems, and producing revenue. It can lead you to an entirely new level, both professionally and personally. Paul writes in Philippians 4:8, think about things that are excellent and worthy of praise. Then the God of peace will be with you. So do you want to change your life? The first step is to change how you think. Now you might go, I'm not sure how I think. We all know, the old saying, some people see the glass half full, some see the glass half empty. Which one are you? When confronted with a situation or a circumstance, you either see all of the potential good that can come out of it, or you see every possible bad thing that can happen. It's like your mind's on autopilot. And if you're the person who automatically sees everything that can go wrong, guess what? You need to change your thinking. Because if it can go wrong, guess what? It can also go right. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.